Why China is selling U.S. debt even at a loss. What if I told you that China, America's biggest foreign creditor, has been quietly dumping U.S. debt, even while taking massive losses to do it? Over the past few years, China has sold hundreds of billions of dollars worth of U.S. Treasury bonds, shrinking its holdings to levels not seen in over a decade. So the big question is this: why would China sell U.S. debt at a loss? Is this a warning sign for the U.S. economy, or a strategic move in a much bigger global chess game? Let's break it down. Section 1. What does it mean to sell U.S. debt? First, a little context. When people say that China owns U.S. debt, they are mostly talking about U.S. Treasury bonds. These bonds are basically IOUs issued by the U.S. government to fund its spending. For decades, China bought U.S. Treasuries because they are considered safe, they pay reliable interest, and they help stabilize Chinese currency, the yuan. At their peak, China held over $1.3 trillion in U.S. Treasuries, but today, that number has dropped sharply. Section 2. Why China is selling, even at a loss. 1. Rising U.S. interest rates. Here's an important rule of finance. When interest rates go up, bond prices go down. The Federal Reserve has aggressively raised interest rates to fight inflation. That means older bonds with lower interest payments suddenly become less valuable. So when China sells these bonds today, it often has to sell them at a loss. But from China's perspective, this pain may be necessary. 2. Reducing dependence on the U.S. dollar. China has been actively trying to de-dollarize its economy. In simple terms, that means less reliance on the U.S. dollar, more trade settled in Chinese yuan, and more gold and alternative reserves. Holding massive amounts of U.S. debt gives Washington financial leverage, and Beijing doesn't like that. Selling U.S. Treasuries is China's way of regaining strategic independence. 3. Preparing for economic and political risk. Let's be honest, U.S.-China relations are tense. We've seen trade wars, technology restrictions, sanctions threats, and rising tensions over Taiwan. From China's point of view, U.S. debt is no longer just a financial asset, it's a geopolitical risk. If relations get worse, China doesn't want trillions of dollars tied up in U.S. government paper. 4. Defending the Chinese economy. China's own economy is under pressure. Growth is slowing, the property sector is struggling, and capital is flowing out of the country. Selling U.S. bonds provides liquidity, real, usable cash. That cash can be used to stabilize financial markets, support the yuan, and fund domestic priorities. Sometimes cash today is more valuable than profits tomorrow. Section 3. Is China weaponizing U.S. debt? The short answer is, not really, at least not yet. If China suddenly dumped all its U.S. treasuries at once, it would hurt U.S. bond markets, hurt China's remaining holdings, and strengthen the U.S. dollar, which China does not want. So this isn't financial warfare. It's a slow, controlled retreat. Section 4. What does this mean for the United States? For most Americans, the immediate impact is limited. Why? Because other buyers step in. Countries like Japan, pension funds, and even the Federal Reserve. And despite everything, U.S. Treasuries are still seen as the world's safest asset. But long-term, this shift sends a powerful message. The global financial system is becoming less U.S.-centric, and over time, that could raise borrowing costs, increase market volatility, and slowly reduce America's financial dominance. China selling hundreds of billions of dollars in U.S. debt, even at a loss, is not panic, it's strategy. It reflects a world where trust is declining, geopolitics matter as much as economics, and financial alliances are changing. The real question isn't whether China is done selling. The real question is this: who will replace China as the world's most important buyer of U.S. debt? If you found this breakdown helpful, hit like, subscribe for more global finance explainers, and comment below.